경험이 없는 초기 스타트업의 경우에는 더더욱 투자자와의 커뮤니케이션을 어려워합니다. 하지만 투자자의 의사결정 방식을 알고 나면 조금은 수월해지지 않을까요? 글로벌 시장에서 활동하는 투자 사이드의 이야기를 들어보는 시간으로 통역이 필요하신 분들은 리시버를 세팅해 주세요. 리시버는 좌측에 준비되어 있고요. 한국어는 채널 3번, 영어는 채널 4번입니다. 그러면 여러분들의 큰 박수와 함께 541 벤처스의 이은세 대표님, RevereVC의 크리스 션 대표님, 그리고 SOSV의 윌리엄 바우 빔 제너럴 파트너님을 소개합니다. 박수 부탁드립니다.
Hello, so good to be here again this year. My name is Eunse, and I'm the founder and managing partner of 541 Ventures. We're based in Los Angeles, and what we do is we do seed stage frontier tech companies with at least one Asian co-founder. So we are looking for great companies coming out of like Korea, Japan, Taiwan, Singapore, these great Asian countries that can come to the United States, and also the US companies with at least one Asian co-founder. So that's what we do, and I'm on the stage with Chris and William, and I'm gonna, well, you can introduce yourself. Please go ahead, Chris.
Well, thank you, COMEUP organizers, for having us. Thank you, Eunse, for connecting us with the organizers and being here. My name is Chris Shen. I'm the co-founder and COO of Revere. Revere is very straightforward. If you're familiar with Bloomberg Terminal, we're the Bloomberg Terminal for alternative investments. Data analytics in the front. We have a community of over 600 emerging managers, including 541. And essentially, on the back end, we do portfolio monitoring, risk management for investors of all different shapes and sizes, large corporates to single-family offices. I was a family office investor in Asia for about, lived in Asia for 13 years, mostly Hong Kong and Taiwan. And what we do is we're just here to be helpful to the venture capital allocator community, GPs or LPs, and just be sort of a trusted resource for data in addition to sort of helping you manage your portfolio. So I'm happy to be here. Thank you so much. And, thanks for having us.
William.
Yeah, sure. William Baubin, Managing General Partner, Orbit Startups. So we are early stage VC, investing mostly emerging frontier markets. So taking what we learned from 20 years of investing in China and bringing it to local founders across East Asia, Southeast Asia, South Asia, now Africa, Middle East, and LATAM. And so the main focus for us is economic independence. So using technology to enable people from like a gig worker to even a celebrity to make a living. And once you have economic independence, we want to make sure that what happened in China doesn't happen everywhere else. Because in China, they destroyed their environment, like 95% of the rivers were polluted. And they also destroyed their health. 40% of Indians have a lifestyle disease like diabetes and high blood pressure. So we're about technology-driven transformation. Thanks.
Awesome. So how we want to structure this session is, so we're going to be talking about how VCs make decisions. And I want to start with Chris, because Chris meets basically like, like GPs, like GP means venture capitalists, like 541 and, SOSV all the time. So I'd like to hear from Chris about his kind of general observation about how VCs make decisions. And then William and I can kind of add up some specifics and spice it up. So Chris.
Yeah, the Eunse and William will talk about what is actually done because they do it for a living every day. So my perspective is because we have 600 venture capital funds in our community, we do a ratings process for them. So we know sort of, again, you can break it down between sort of how a GP invests in a startup, right? Many of you, show of hands, who's the startup founder out here? Anyone here? Raise your hands. Okay, not many. And who is an investor into funds? Like you invest in funds, you're an LP. So you got a few, right? So I'll break it down from two different angles, like how a startup can sort of talk to a GP so that it can inform their decision-making process. And on the flip side, for LPs, what you should be looking for when they tell you how they decide. So when you look at the data set, managers can be like Eunse, who's a solo GP, to William, who has a very developed sort of larger team, and you can have a data-driven process, funneling, automatic this, or just one person looking at deals and making a decision, right? But at the end of the day, you want a repeatable process that they can sort of scale, because they need to look at as many startups as possible and then make decisions on as many, because we're driven by power law and sort of dynamics there, right? So when you're looking at a GP, from an LP perspective, look for a repeatable process. Look for something that has a systematic approach to it. It doesn't have to be like AI driven or anything like that. We're not going to turn this into an AI panel. Well, maybe you will, but I'm not going to do it. So look for that, right? I think secondly, when you think about you're a startup and you're trying to get Eunse or William to invest in your company, try to think about how they're looking for reasons to say no. They're both very busy. They're fundraising. They're talking to their companies. They see a lot of ideas and a lot of pitches, right? But how do you stand out? Talk about the thesis. If you're early stage, they're basically betting on your team, right? Talk about the team, product market fit, founder market fit, different things to inform how they think, because in their minds, usually they have a checklist, right? They're thinking team fit, market sizing, et cetera, et cetera. If you don't address those in like 30 seconds to a minute that you have with them, they're probably thinking about something else, right? What they're going to eat for dinner, how they're going to get home, et cetera, et cetera. So focus on that, I would say. Obviously, there are different parameters to sort of specialized startups, et cetera, that we can get into later. But those are the things that I would emphasize coming at it from an investor perspective, as well as a startup perspective, to inform a GP.
Yeah, that's a great point. And I guess what I want to tell you is there are actually like two sets of like very different GPs with like very different kind of appetite. Which one? First one is like generalist. Basically, generalist funds looking for like interesting project in whatever spaces. And I think SOSV is one of the great example of that, because you have really wide kind of spectrum for like interesting and exciting founders. So I like to kind of hear your thoughts about how you can make the kind of repeatable success in terms of like choosing the right companies, and how do you embed that in your decision-making process?
Yeah, so I think one of the things that we're really focused on is some very fundamental challenges or problems that's facing the world. So, for example, food. Food drives a lot of the carbon emission in the world. We actually have way more food than we actually need in the world, but at the same time, there's food shortages. There's massive food waste. So how is food produced? How is food transported? How is food distributed, purchased, and consumed? And for us, especially in emerging frontier markets, there's a lot of different areas to apply technology to improve this process. So that people can spend less money for food, the people who are making the food can make more money, and that a lot less of that food is wasted, so that we don't burn up our earth. So we look at tech-driven solutions, because if you can't bring tech in, you're just going to be doing the same thing that was happening before, just maybe a little bit more efficient. So that's just a small change. It's change at the margin. But what we were trying to do is drive a revolution in how things are done, a massive change, because that's where we can have a bigger impact on the world, and that's where we can also have a bigger impact on our bottom line. And ultimately, we're responsible to return not just the money to our investors, but a multiple of the money to our investors. So we want to do well, we want to do good, but we also want to monetize.
So I'd like to stretch your question a little bit more. So what's your kind of typical process in terms of like intake startups, interesting ideas and entrepreneurs, to decision-making points? Like what does it look like?
Yeah, so for us, so most people think that there's many startups and few VCs. Actually, there's many VCs and few good startups, right? And so everybody's money is kind of like the same color. Well, actually, technically, there's red money and there's green money and there's blue money, but everybody's got money. Money actually doesn't really matter that much. So for VCs, what we spend most of our time doing is trying to differentiate ourselves outside of the money. And for Orbit, nobody really cares about our money that much. Why? Because what we do, we're like a service provider. And what we're trying to do is help our companies solve their problems. And so we look at ourselves as a startup, and our customers are startups. and their major problem is money. Now, there's two types of money. There's revenue, which is money that we like, and then there's investment, which is dilutive, and it's not as good as revenue. So what we're focused on doing is providing service to our founders to help them get revenue. And once they have revenue, then we help them get investment. It's a lot easier to raise money if you don't need the money. So first, build business, then raise money. So because we have built a relatively decent reputation for providing good service to our startups, all of our investment deal flow is basically inbound referral. VCs who are later stage, they refer companies to us because they see what we do with those companies. We help them grow, and then we feed those startups back to the VCs. Angels like what we do with their portfolio companies because we take the companies and basically put a lot of work in. We got 40 people on our team, right? We're not set up like a normal VC where it's like 3 or 4 or 5, 6 people flying around. We're spending a lot of time. And then our founders are actually the biggest source of other founders. So founders bring founders. So our deal flow is really from the community.
I want to double click on William's point. I think it's very important because we do a ratings process with 20 different metrics, and one of them is value add, sort of revenue generation. Everyone here, I mean, I'm Taiwanese Chinese, but I grew up in America. There's a saying, it takes a village, right? It takes a community to raise kids. So if you think of kids as startups, it takes a community, right? It's not to say that solo GPs like Eunse cannot add value. They can, because they're specialists, they have a PhD in science, they know how to commercialize. That's a big value add. But I would say out of the 600 managers that we know, there's probably 1 or 2, if not 3 managers that has William's team's 40 people, right? That's like a company, a real big company. If you think about that, they're doing sort of go-to-market, they're helping with events, marketing, things that when you're a founder, a startup founder, you're driving at customers, right? You're trying to generate revenues, make your customers happy, make your clients happy, make your employees happy, and just managing the ship as you're designing and building and flying and all that stuff, right? So when you're able to work with a value-add VC that can help generate the revenues to William's point and not dilute all that financing in the front, that is a massive, massive, advantage, right? Behind you, you can see sort of Deal Korea, Kyobo, Dassault, AWS. They're all rolling out systems to help, again, with community to bring companies and startups to their network, right? You'll probably have to buy something from them or something like that, but it's very much, it takes a community. So when you're an investor or when you're a startup founder, don't overlook that part of the VC, right? Going back to the decision-making process. If you're a startup and you need that help, in those certain jurisdictions, go find those VCs that can do the value add, right? Money's all the same. The money is going to be accepted at a bank. It's all the same. And if you're an LP and you're looking at the fund, and every VC always says, oh, I'm value add, I do this, but it's usually just introductions. It's usually like, sending in WhatsApp, sending an email, whatever. That's not enough. That's like literally sort of table stakes. Drill down into how do they help with go-to-market? How do they help with commercialization? How do they help with research? How do they help with all these different things? Ask the questions, and then you'll be, I think, surprised with some of those answers. I
do believe that value add is like super important, but my observation is kind of like controversial in terms of that because, like for example, intros, right? Introductions, like capital introductions, like revenue introductions, help in terms of talent acquisition, all these kind of things, and I think that's what we sell on. Sell ourselves to the founders to accept our money. But then again, my observation is kind of when the company's doing great, really, really great, all of these things actually don't really matter that much because you guys are already doing great. And on the other hand, when you're kind of in a downward spiral and things are not really working well, all of these things again don't really matter because at the end of the day, it's all on the company side. So I guess I like to kind of hear from William in terms of to add values. I think we need to have really good fit with GP and the founder, right? VCs and the founder. So I like to kind of hear your thoughts on how you figure out this fit between VC, VC and the founders, and your take on this value add because you put a lot of focus on value add, right? So can you please hear your thoughts?
Yeah, so founders, we do early stage. So you're not exactly investing in a company, you're investing in a startup. And a startup is like an idea looking for scalability and repeatability. You've heard that probably before, right? We generally don't invest in like super young people unless that super young person has some special knowledge about whatever it is that they're doing. There might be a PhD in something, or Mark Zuckerberg was a college kid and he was solving college kids' problems, right, with Facebook. So we're looking at for people that are really passionate about whatever the challenge is that they're solving, and then for us, like we don't know everything. We have a huge amount of experience, but we don't know everything. So what our growth team does is helps drive data-driven decision making. So it's just experimentation, and then experiment. And so we try very hard not to tell the founders what to do, but we help the founders do experiments, and then the data can help drive their decision making. And if you just kind of keep on doing this over and over and over and over again, it's pretty difficult to fuck it up. Right? You can generally get a company from where they are to where they want to go, because where they are, really requires some big changes to get to where they want to go. And through this process, it's like a data-driven, process-based framework for getting to product market fit, and then scaling up in home market, and then going cross-border. One of the biggest challenges with Korea is Korean founders are pretty shit at pitching to global investors. It's not a linguistic thing. It's just the way that they describe what they're doing doesn't really resonate that well with global investors. And so it's something that you can actually just learn. We had one guy, he actually, it was a funny story. So he didn't speak English, like really at all. And then, so it's a 6-minute demo day pitch. And we helped him with it, and it was translated, and we put the pauses in and the intonation. Basically, he learned his 6-minute pitch like a karaoke noreban as a song. He basically sang his pitch, 6 minutes in English. Okay? And afterwards, all these investors are coming up to him saying, hey, how's it going? Like to follow up, great. This is what you're doing is amazing. And then he would just kind of like point at his interpreter and say, sorry, no English. So again,
is he still around?
No. So he's that company died, but after, the cool thing is he went to Singapore and he basically learned English afterwards. So I mean, he understood that it was very, very important to be able to communicate, and then he figured it out. But yeah, so it's not so much linguistic; it's that the how to communicate can be quite key. So don't worry about your English, but you do need to learn how to pitch.
Yeah, the art of pitching, I think, is very, it's so important, right? It doesn't matter the language, to William's point. It's just the style and the ability. You have to come off as very, eager but not aggressive, sort of very driven by the cause but not like crazy, right? Like that's basically, it's always a fine line. And I think when we talk about the decision-making process of VCs, if you're a startup founder, you've got to present that in that limited amount of time in a way that's convincing to William and Eunse, who are, as you can tell, two very different people, and sort of find that in the middle, because they're all thinking sort of within that VC checklist, right? And I think conversely for LPs looking at their funds, you could tell that William knows a thing or two about company building. Eunse has his views on sort of, how VCs should invest and back companies. There's a broad spectrum of managers out there that you can make decisions on. It's like stocks and bonds, right? You can buy whatever you want, back whatever you want, but that's sort of how emerging managers and VC funds are today, right? So when that VC fund talks to you about their ideas and their mission, thesis, all that, you can vote with your money and sort of assess them the way they are assessing startups. It's the same game.
Yeah, I'd like to just add one thing. So before 540 Ventures, I was with a little company called Techstars. And what Techstars basically tell the founders is this. When you give a pitch, it's really 6 words. So I hope you can kind of like memorize this. You have to stab a knife and then twist it. That's what you got to do. But I think it's really hard for like many Asian like founders because of culture, I think, because like we really put a lot of emphasis on like being humble and all of this like bullshit, right? So just stab a knife and then twist. That's what you got to do in terms of pitch. I'd like to talk a little bit about the things a lot of entrepreneurs don't really know, which is the relationship between GPs and LPs, which is LPs are basically money behind money. So we are basically heavily influenced by the LP's appetite because without their money, we cannot make investment. So I'd like to hear from you, Chris. Like, I think so many entrepreneurs are kind of hitting their heads against the wall these days, especially for like this tech winner. So I like to hear, because you always talk to like different LPs, like how their appetite changed these days, and how they will kind of that is kind of changing GP's perspective on like picking great companies.
Yeah, I think a lot of people have tried to sit out 2023 and all the stuff that's been going on in the world, macro overhang, blah 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 blah, high interest rates. Those things are here to stay, right? The conflicts, interest rates are not going to be cut next year. China's still figuring out what they're going to do, and it influences all of markets and around the world, right? I would say that the relationship between a startup founder to an LP and kind of all that, GPs are paid and sort of funded to go take risk, right? So outside of generative AI, which we are not going to talk about today, essentially they still have to be investing because a lot of the LPs in the beginning of 2023 were like, don't do the capital calls. I need some time. I need to figure out what's going on in the macro markets. My portfolio is getting destroyed, right? Don't call money. But by end of Q1 this year, early Q2, they were like, oh, you have an AI element? You got to go invest, right? Because they saw sort of what was going on, et cetera, et cetera. So the relationship boiled down is, with GPs, I tell the GPs, you need to have an understanding of what's going on in the world, right? We were backstage and we were talking about not VC. We were talking about like China macro. We were talking about US cross-border, our hometowns and all this other stuff, right? Backgrounds. That's what we're talking about. We're not talking about this startup, that startup, whatever. So we tell all of our GPs, have an understanding of what's going on in the world, right? If you're looking at fintech startups and banks are being hit by high interest rates or benefiting or not benefiting, you have to understand that because you are buying companies that might be doing treasury, blockchain, whatever. And if an LP asks you that as a thing to trip you up and you get tripped up, you're never going to see money from them, right? That's one. I would say two, open lines of communication in terms of what the LP wants. Because at the end of the day, to Eunse's point, LPs do make the world go round. It's their money. They put it with you. You take risk and you kind of move on. Hopefully everyone makes money, et cetera, et cetera. So when you work with them, they are your patron, your benefactor, your client, right? You're paid to do that. Be very upfront, right? Again, this is past that strategy where they've accepted you for who you are. Talk about what you're doing, how you're going to do it, but don't bullshit them, right? Simple as that. Just don't bullshit them. Be very honest with what you're doing, how you're doing it.
Great point. William, I'd like to hear from you. So one, I'm curious how you're kind of responding to this like kind of tech winner in terms of like both the appetite of GPs and LPs alike, and how you're kind of adjusting your appetite for these exciting founders.
So what kind of founders?
Exciting founders.
So there's always going to be another cycle, right? I've been doing tech investment 27 years. So we generally focus on like as much as possible, buy low, sell high. That's a very simple thing. But what happens when the shit hits the fan is people stop investing. And that's actually when they should start, right? So for us, we, as much as possible, trying to be very consistent, kind of in good times and bad. And we also try and focus on areas before they are hot. So VCs and investors in general are very much like sheep. They all group together and they see, hey, there's green grass over there. And then they all go over to the green grass and they eat it down to nothing until there's brown dirt, right? And then some of them might make some money, whatever. But what you want to do is you want to go to the green grass before the sheep show up, right? So for us as early stage investors, you want to go a bit ahead of the herd and get there first. So for us, we're trying to not. We've been investing in AI for a very long time. It wasn't super popular So our AI companies actually have revenue, and a lot of them are profitable because they didn't have a choice. Otherwise they would have died because AI was not so much of a hot thing. It was an enabling technology, it's technology that you use to solve another problem. Now it's like very, very, very popular, and that's great for us. We're not investing in AI right now because we already did.
What about blockchain? No, I'm kidding.
No, blockchain actually, now is a great time to invest in blockchain. So we were very active in blockchain in 15, 16. We stopped, we stopped in 17 into 18. We started again in 18, 19. We stopped in 2021. And we've done about 9 investments in 22, 23. And our blockchain is mostly like fintech, but anyway. So it's a buy low, sell high. And right now, when CZ steps down and they pay their $1 billion fine to the SEC or whatever, and we get to the next cycle, we're going to stop investing and hopefully reap the rewards. So that's kind of our approach. We try and be a bit not too far in advance. I mean, I invested in Vietnam in 07, 08, and I still have PTSD. I haven't been back there in a while. So you don't want to be way, way far in advance, but you want to be a bit ahead of the herd.
Great. I guess 3 of us are like kind of different in some stuff, but then again, we have one really big commonality, and I think it's like we want to kind of provide more transparency in this really opaque industry, and that's why we are here. So obviously, we're really passionate about the things, about when we talk about the things that we do, because that really helps to kind of decrease this, opacity. So we have only 5 minutes, and I'd like to hear your final kind of words of wisdom for the entrepreneurs to increase their success rates with VCs decision makings. So William, can I go from you this time? So what would you give as your final words of wisdom for the entrepreneurs here, so they can build a great partnership with like SOSV or Orbit? I'm sorry.
We're part of the SOSV family, and we're internet and software, part of SOSV. So I just say, fundraising is a role. So within a startup, you have like 3 roles. So you have tech, and then you have like product, and then you have the person who sells things, and then the appendix in the startup, the useless organ that doesn't do anything is the CEO, and that person's role is to fundraise. And so it takes a lot of time. The reason why it takes a lot of time is that you have to spend a lot of time trying to build a relationship with somebody and convince them to give you money, right? And so the easiest way to decrease the amount of effort or increase the success rate is by doing your homework, doing your research. So you want to sell to somebody who wants to buy. You don't want to sell to somebody like your startup, to somebody who does not want to buy it, right? And the easiest way to figure out whether they want to buy it is to figure out what they like to buy, right? So, you don't, it's just very, very simple. Try and figure out which VCs want to buy what you have to sell. And so it takes some research.
Yeah, and I would add to that question, Eunse's question, it's very simple. This isn't rocket science, right? Venture capital has this mystique and sort of all that, and the 3 of us, I think we're very different people, but we're up here sort of not talking about like, oh, this is really mysterious and you have to like do this stuff with us. But it's more like, no BS, let's get some more transparency into this, shed the light. But I think for startup founders, and I'm a startup founder myself, it's not easy, right? If it's easy, like everyone would be doing it, right? And if you're like Eunse runs his own fund, running our own fund, he's been doing it for a long time. We were all startup founders too, because an emerging manager, if you're not working for like an Andreessen, Sequoia, or an Altos, you're an entrepreneur yourself, right? Simple as that. And I always say like the only way is through. Like you've got to put your head down, grind, go through it. There are going to be really, really bad days. Some good days to balance it, but you just have to do the work, right? And like trust your gut in terms of when you need to pivot. If you should work with this partner. William mentioned sort of there's some VCs and people you just should not work with because they're toxic, they're not going to help. Just trust your gut, right? But you got to do the work. Got to go straight through, because if everyone could be doing it, they would do it and it wouldn't be sort of exclusive. And 2, what I like to always hear is that, no one rewards mediocrity, right? If your startup sucks, or if you're not a good founder, or your co-founder is not very good, you got to make changes, right? Or you should be doing something else. Go work somewhere else, right? Life is too short.
Chris, actually, you answered my question. And I'd like to hear just one really quick thing from you. You used to be an asset allocator, right? And now you're helping asset allocators. And now you're sort of founder yourself. So from that perspective, at that combination, like how did you get your investors cross the line?
Yeah, well, I'll tell you, it's really humbling being on this side of the table, right? When you're an allocator, like, no, I'm good, thanks, it's humbling, right? But in all seriousness, when we work with investors, I think it's just, again, going back to communication, right? What are we doing? Like, my investors, I have super angels, I have VC funds, I have individuals, whatever. It doesn't matter if it's a 10K check or the $1 million check, they always have to get the same transparency from me, right? Like, I don't feel good, like, bullshitting them, whatever. It's just more, this is what we're doing, and we're gonna do it this way, and I appreciate your support. Let's go do it, right? I think that solves a lot of the stuff where, like, if you're trying to gloss over the deficiencies and the shortcomings, the team faults and all this other stuff, you can't hide all the time, right? So I think with everything in a good relationship with your LPs, with your GPs, if you're talking to startups and stuff, your employees, just be very upfront with everything. Just tell them the truth, right? I think Asian culture, it doesn't matter if you're Chinese, Korean, Japanese, whatever, tends to like, pivot this, bow that. We're not going to talk about it. Not going to work. This is a new generation, right? It's not going to work.
So I guess the time's up, by the way, so I'm wrapping it up. So I guess what we just talked about is, one, have really hard you, and second, be really that hard you. I guess that's just what we talked about, and we hope that this was helpful. We are wrapping up because of this time constraint, but we'll be happy to answer any question in the backstage. So if you have any question, then please come see us. Thank you.